angle.
So the big question is this. Will the U.S. and China be able to smooth over their differences before the G20 summit the end of this month? Or will their behavior send the global markets in a tailspin that they can't come out of? Today, we're going to look at this possibility coming up. Everyone, I'm Lynette Zang, and welcome to ITM Trading. On November 17th, there was a meeting of the Asia-Pacific Economic, Cooperation Summit that ended for the very first time since 1989 without a joint statement. This is the first time that that's happened. And that happened because the U.S. and China couldn't agree, and it really is an escalation of the trade wars. Though the entire world has to take cover because you now have, well, it's not just now, but you've got the world's largest and second largest economies. These are the economies that are supposed to keep global growth going, hugely clashing. And the end of this month, just a week away, there'll be another meeting at the G20, and we'll see what happens there. However, if they can't come to an accord, frankly, the global markets are in deep trouble, and this could send them into territory that they cannot recover from. Because remember, all of the derivatives and the lack of liquidity and the shrinking buyer base, these are all coming together to create a large global threat. I want to point out the death cross. That's when the stocks fall below a certain level and their moving averages cross. Globally, this happened the beginning of October. And as the month had moved on and we're now in November, the division between those two moving averages have grown wider. And that's why I say it is now pervasive. This is not a good thing. And the other thing I want to point out is up until recently, you had a divergence between the global markets and the U.S. market. Now the U.S. market has been dropping to catch up to the global markets. And in the NASDAQ in particular, there is a probable death cross coming. This is not a good thing for many, many reasons. And so we look for where the safe haven is. Well, in China, their growth was fueled. It was just a huge debt binge in corporations and in shadow banks and all of this. But China, the government and the central bank has been trying to reel that in because of how risky it is, and they've been trying to transition into a consumer-driven economy. That's not such an easy thing to do, and we've seen an explosion in consumer credit there. Can that keep the Chinese economy supported? I don't think so. And in fact, in auto sales alone, for the first time in many decades, you've had a major decline in passenger car sales, which relates directly back to the average Chinese citizen. And that's because you're seeing fragile consumer confidence mixed with what's going to happen with these trade wars and the tariffs and all of this. And so people get uncomfortable and they stop borrowing and they slow down or stop their spending. So I don't think China is getting any help from that source. So between the corporate debt slowdown, and that's policy driven, and it's also income driven, as well as the consumer debt slowdown, the GDP of China is also slowing down. And this is what the globe has been counting on to keep everything going as we transition even the power from the West, the US, to the East, to China. And all of China's growth gauges, well, almost all of China's growth gauges are reading negative moving into the future. So, I mean, I think you're beginning to see the picture of what we're looking at here. Because all of this global mountain of debt, and a lot of it's in China, it's all over the place. It has to be serviced, or there are going to be more and more defaults. Well, if the global economy is slowing, how are these corporations and how are these individuals going to pay the debts that they've already accumulated, let alone have the ability to accumulate more debt? They're not. That's the problem. And with both China and the U.S. basically digging in their heels, this is not a good thing for global growth. They're even anticipating, I mean, economists did a forecast in September of what the economy would be like and the global growth would be like next year, 2019, in September. And they just did that survey again, and all of the economists have ratcheted it down. Not only that, of course, the IMF, the BIS, everybody has been calling for a global slowdown. So now you have a battle of the titans, and you have all of the debt that is really already exploding in a rising interest rate environment, and you have an imploding stock market that has to be triggering margin calls. That means debt calls for all the funds that people borrowed to buy stocks. And you have stocks that are now falling deeper and deeper, not just into correction territory, which is 10% away from their highs, but into bear market territory, which is 20% or more below their highs. We really don't even know what that's going to trigger yet in the ETF world, which really amplifies the moves in the markets one way or the other. It doesn't really matter. But the scary part that you can see here is the debt demand declining. So the governments can create all the stimulus that they want. But if consumers and businesses stop borrowing, they're not going to stimulate the economy. And the more stimulus that they do, the more it takes the next time. So it really is looking, and we'll see, but it really is looking like this is it. That it's like pushing on a string. Even if they put more out there, you have to have cooperation. And it's kind of hard to cooperate in taking on more debt when you're already maxed out. If all your credit cards are maxed out, well, maybe you can get some more to pay the minimums or keep the rest of it floating for a minute. But at some point, you're not going to be able to do that anymore. And I think we're really, if we're not at that point, I really think we're at that point right now. I really do. I'm sorry, but I really do. It's the way I feel about it. It's what I'm seeing about it. And so really, what is the safe haven? And we know what it is. We're seeing global demand for bars and coins that are up 28%. Not in the U.S. In the U.S., the ETFs are selling off their holdings. Well, they're probably being absorbed by the banks that have the ability to hold that gold. Wouldn't be for you or me anyway. But in China particularly, they saw demand rise 25% year over year, which is the largest gain since 2013. What's that telling you? They're getting ready. We've seen the same thing with global central banks, and the number of central banks buying gold has expanded 28%, the highest level since 2015, which you may recall if you've watched some of the previous videos, that in 2015, that's when the global currency peg system, the current one, began to break down. So that was crisis driven. Now we're seeing the same level of demand that we saw then, and that was an obvious, notable crisis. You can draw your own conclusions, but it's pretty clear to see that those people that understand money and understand what's happening into this system, they're buying physical gold. Physical silver as well. You need both. And the central banks, they are definitely accumulating physical gold. And who knows more about money than they do? And who knows more about the fragility of the system than they do? But now you know too. So what are you going to do about it? And when are you going to do it? They're doing it now. They've been accumulating. They've been accumulating like crazy. Central banks, particularly, have been accumulating like crazy since 2008. If you haven't prepared with food, water, energy, security, shelter, barterability, wealth preservation, and developing that community, there is no time like the present to get ready. This does not look good. We've got, well, November 30th, we'll see what happens at the G20. But chances are pretty good. It is not going to be any better than the summit that just basically failed. Consider this a warning. And please, please, please protect yourself. Please. It is not okay with me for the government, the central banks, and the bankers to rob you of your wealth. That is not okay with me. That's the whole point of my work and all of the research and everything that I do. And I am here to be of service. In fact, all of us here are here to be of service and help you develop your own strategy. They have a strategy. Do you have a strategy? Because if you don't, you need one. And it needs to be comprehensive. And it needs to be put in place as quickly as you can. This very well could be the last opportunity to do it. And we're going to know a whole lot more over the course of this next week or so. But technically, it's horrible. And there are no buyers showing up. These markets are not dropping because of a panic. Listen to mainstream media. They'll tell you, oh, there's no panic here. No. And yet you have, I think it's 45% of the S&P in full bear market territory, and there's no panic. That's because there are no buyers. These markets are falling under their overvalued weight. That's what's happening. They are falling under their own weight. So that's it for today. A Minute to Midnight was just released, and we really covered so much ground. I love Tony. He's such a really interesting character, really, really bright. And we covered a tremendous amount of ground in that interview. So I think you'll really enjoy that. And next week, I'll be interviewing with Trad Cat Knight. So again, he does a great job in the interviews, and I'm really looking forward to that. And don't forget about the event that we have coming up in February. It will be here in Phoenix. It really is an event. It's like 2 days. It is the most comprehensive webinar, or it's not a webinar actually, because it's going to be done live. We're keeping it nice and small so that you can have as much individual attention, or almost as much individual attention. No, I'll say it. We're keeping it nice and small so you can have lots of individual attention. And my goal for this event is so for those strategic investors that are ready to really put their strategy together. And that's what will happen. By the end of this weekend, you will have your own personal strategy. And you'll be working with well, all of us here to make that happen. So the link is in the description below. Remember, you have to put a www.itmtradingevents.com in there. And if you like this, give us a thumbs up. Don't forget to subscribe and make sure you hit that little bell next to the subscribe button, and we'll let you know when we're going on live. And until the next time, keep in mind, shields are made of metal, not paper or plastic or promises. So until we meet the next time, please be safe out there. Bye-bye.